The financial markets are relatively calm. The greenback is holding in the same trading range. At the same time, it has not been able to break above the resistance level of 91.95 for a long time. The yen edged higher, but an increase was slightly below the forecast. In the near future, the yen is expected to strengthen against the US dollar. The Australian dollar resumed a downward movement as we predicted. Fed Chairman Jerome Powell said on Monday that the U.S. economy's recovery remains far from complete despite recent improvement. This is why the Fed will continue to support the economy as long as it takes. Powell's remarks were bullish for the U.S. currency. As a result, it started correcting upwards on Tuesday morning. Besides, the greenback's growth is bolstered by negative news from the eurozone. The euro area is likely to face the third wave of COVID-19. The situation is aggravated by low vaccination rates. Interestingly, the greenback has been unable to break above the resistance level of 91.95, forming false breakouts for the third week in a row. What's more, it's unlikely to break above this level today if there are no macroeconomic drivers. If so, the quote will remain in the range of 91.70 to 91.90 until the end of the day. The US is going to unveil data on new home sales for February. This report may slightly push the US currency down as the figure is likely to decline amid a seasonal drop in sales. Yesterday, the dollar-yen pair remained practically unchanged as the correction of other major currencies took place amid the hype around the Turkish lira. The Turkish currency slumped by 14% in the one day after the governor of the Turkish Central Bank was fired. By this morning, the lira has already recouped half of its losses. However, according to technical indicators, the USD JPY pair keeps falling rapidly. This is a sign of a deep consolidation, which may turn into a deeper correction. If today the pair does not reach the level of 108.85, it's likely to leave the consolidation range and slide down to the target level of 108.16. Our forecast for the AUD-USD pair was correct. The pair did close the gap yesterday. Technical analysis experts believe that the pair will move down to the target level of 0.7615. On the chart, it's heading for the balance line with a further reversal. After dipping below 0.7706, which also coincides with yesterday's low, the pair will resume a downward movement. And that's all for now. We wish you profitable deals. See you on our channel with a new video in a couple of hours.